Welcome to Drill Down Earnings. We have quarterly results out from Fabrinet, one of the 50 most important companies in technology. Says me, Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. Fabrinet is a stock that I own, so I'm totally biased here. I'm not giving investment advice, but I want you to know what my bias is as we talk about this here. But I want to show you why I think this company is important, and these are the companies we cover here at Epistrophy Capital Research. I said, did I say I'm Cory Johnson? I don't know. I'm so excited about these results. They were revenues much better than estimates than what Wall Street had. They had $978 million in revenues, all-time record for this company compared to the $935 expected by Wall Street. Although earnings per share was a little bit light. So let's dig into what the business did here, the actual numbers. I'll let you judge for yourself the importance of these numbers. So 22% year-over-year growth. So not only is the company growing really well, it's growing at a faster pace. And as I mentioned, a record for this company. Now, adjusted earnings per share were $2.92. So that was better than Wall Street's expectations. But again, I think what matters here is what's really going on with the company beyond the Wall Street expectations. What does Fabrinet do? So it's a company with manufacturing in Asia and other smaller factories built around the world, focused on telecom, specifically optical communications, as well as automotive. So you're thinking, what have optical got to do with automotive? Well, LiDAR, EV charging, LED and laser lighting, they do a lot of that business. Industrial lasers, as well as high performance computing, a brand new sector for them, and some medical diagnostics and some meteorology, how do you pronounce it? Metrology, I should say, making metal stuff using layers and instrumentation here, as well as some customized optics, beam splitters, prisms, laser crystals, and so on. Think of these guys as a contract manufacturer. So there are many other companies that want optical types of componentry and technologies that don't have the manufacturing capacity. These guys make it. So their business has long been split between telecom and datacom. And the datacom business has been slowing down for quite a while here, and they've been warning about this. And one of the things good in this quarter is the datacom business was bad but didn't stink. It was down only 1% quarter over quarter, down 17% on a year-over-year basis to $273 million. And the business that they've warned us is going to be shrinking, not shrinking so much. Maybe that was good, but look, telecom exploded with their datacom interconnect business. Telecom was at 59% in the quarter, really, really strong, to $412 million in the quarter, up 15% sequentially, and driven by this data center interconnect business that was up within that 92% to $138 million. If you look at the data center interconnect business as a stack, if you will, on top of the pure telecom business, you can see, if you're watching us on Spotify or YouTube, you can see in the orange how that business is growing so much faster. It's a smaller business, to be sure, but growing so much faster than anything else going on at this company. And they expect that to continue. So they're investing in it. They've built building number 10. It's a big deal if you're following this company. When is building number 10 going to get going to get done? It's in Thailand. They say it's on track to complete by the end of 2026. And their next quarter guidance suggests that it looks like it's going to happen for them here, because they're suggesting they have about 1.07 billion in revenue in the quarter. But an interesting surprise for those of us obsessed with our financial models like me, there's a new sector. They've had automotive, they've had industrial laser, they've had others. Now they have high performance computing, and right off the bat, it's 7% of revenues, $15 million in the quarter. They say that's going to scale considerably. High performance computing, where they're building things that happen right on the circuit board using optics, not co-packaged optics, but using multiple layered things that will connect information on a circuit board and in the data center, built right into the circuit board. That's an exciting new business for this company. And the market liked these numbers. The stock was up 9% in after-hours trading after being up 83% in the last year, which, as I mentioned, makes the Johnson family happy. There's a lot of us. We need a lot of love and joy surrounding our investments. Again, I'm totally biased here, so disregard everything I say. It might be the best advice ever. But data center interconnect, as I mentioned, really growing. 400ZR and 800ZR coherent optics. 800 is important because the graduation from 400 to 800 to 1600 is something we're watching across this industry. And they're talking about it, saying that they didn't give us exact numbers, at least not in the press release. But Fabrinet line cards and optical amplifiers going to multiple original equipment manufacturers. Really positive. But again, I think the real big takeaway is that data center interconnect business exploding, 92% growth. Here's what CEO Seamus Grady had to say about that business.
I think what we would say is, we're in the very early stages, really, of a generational transition to photonics that we've seen going on for some time. Fabrinet is really ideally positioned to continue to capitalize on this transition. We manage a lot of complexity for our customers, and as they've seen, growth doesn't always happen in a straight line. But for any company, I think the best predictor of future performance is past performance. And if you look at over any time horizon you care to look at our 10-year history, the revenue, we had compounded annual revenue growth of 16%. We compounded the earnings 21% over that same 10-year horizon. Last year, our revenue grew 19%. Last quarter, our revenue grew 22%. And as Csaba said, at the midpoint of our guidance for this quarter, we're projecting to grow 29%. So, really, Carl, our objective is to make sure we have enough, if you like, irons in the fire and enough customer opportunities in front of us that we can continue to deliver that kind of outsized growth. We're quite excited about this period that we find ourselves in the middle of. We think we're ideally positioned, and we're just going to continue to keep pushing ahead, winning those opportunities and executing on them.
No, Seamus Grady, it might be in Thailand often. Company headquarters in Thailand. He doesn't sound like he's from Thailand. His name's Seamus Grady, for God's sake. All right, what's your drill down earnings takeaway? What's the one number that tells us a whole lot? Well, first, subscribe to us. Click on the follow button, whatever. We want to know that you're out there so we can continue to bring these reports to you. It makes things so much easier for us going forward. So wherever you're listening to this or watching this on YouTube or on Spotify, we really appreciate the follow. But your summary. So, Fabrinet Q1 fiscal year 2026 earnings for Fabrinet were really good. I'm biased. I own the stock. It's not investment advice. I just want you to know that you should take everything I say with a grain of salt for that reason. But I'm excited about these results because it was record growth for this company, record numbers, 22% year-over-year growth. They're bigger. They're growing faster than they have in quite a long time. And they talked about this generational change to go from telecom to photonics, coherent optical silicon photonics, AI cluster interconnects, all with sequential growth expectations. And yes, a whole new thing, and I think that's the big number that tells us a whole lot. 7% of revenue is a brand new sector of high performance computing for Fabrinet. Look at our full reports on YouTube and Spotify and all the podcast platforms, and follow me on X at Cory TV, at Drilled on Pod, on TikTok, Instagram, and of course on YouTube.